Welcome, ladies and gentlemen. This is your watch list for July 23rd, 2019, presented by The Colt and Josh Answers. All right, let's go, baby. I hope you guys are ready. I had an awesome time on stream. If you don't know, we are live Monday through Friday, 30 minutes before open, but we have plays to talk about. Post your watch list below. We're going to go over all of these plays tomorrow morning pre-market in the comments. So thank you guys for being super duper awesome. And I don't know, I've never said super duper, but let's get into it. I have to talk about the keys for tomorrow. I want to talk about what this Fed blackout is, and then overall just cover the plays that we're looking at and go from there. So even though it's the name of the title, I do want to talk about Beyond Meat. I am super long, and what I mean by that is the option that I played with a lot of time. And if you didn't see today, that option, we've been holding it for months. I used a specific strategy on it, and how we're going to be playing this, I think it's going to be very relevant here in the next few days, because if you've been watching the watch list, we've been talking about Beyond Meat. It's ramping up in earnings, and I don't think it's just going to go away yet, despite that kind of crazy move it had at $200 today, right when it hit it. But I'm still excited. I think it's going to be great. But now, as far as your keys for tomorrow go, I'm going to show you guys the plays that are reporting tomorrow morning, and we're going to cover those. But more importantly, right here, what we need to know is when is more important than what. I think Sergio, my guy, brought that up here on stream today, and he said, it's crazy, man. I've been watching these options and just noticing how important the timing is, and your patience could go a long way with the plays. You know, those Boeings, if you took this concept at heart, it was the difference between making 1,000% and 15,000%. And some of the plays I'm going to go over today, they have this in mind. But now what this is making you guys realize, you guys, earnings season is kicking off and it's getting into full swing. You guys are even going to see tomorrow and Wednesday and Thursday get even crazier. The main thing you guys got to watch out for is implied volatility. We kept saying this on stream today. Hopefully you guys remember, this is the new Colt chant. This is so applicable because you guys got to see what you want to play and be careful of not getting caught into this earnings premium. You will get hit by the quote-unquote IV crush. And again, that is not causing it. It is a result of what's happening. Why does this boogeyman IV come up? Because people are expecting earnings and they don't know what's going to happen. So the prices that are so close to the expiration, those are going to go up in value. So the IV goes high, not because it went high and then the prices went high, but people start paying more and more, and the market makers start charging more and more because they're uncertain. And as a result, the implied volatility is high. So if you buy your option at the wrong time, even if you make the right move, you will still lose money sometimes. Again, it's not all the time or this or that, and that's what the same thing. I want you guys focusing on this because I don't want you too scared to miss opportunity, but I don't want you to think that a rock is a diamond when you're looking at some of these and overpricing them and just getting slaughtered. So now that's out the way, we could focus on the next thing, the Fed blackout. So a lot of people now, again, if they've asked when is this, when are they supposed to cut rates or this, when does that announcement come? It is July 31st, next Wednesday, but now there is a Fed blackout. It's kind of like the buyout blackout or the buyback blackout, but instead now you're not going to hear any speeches. So remember, last week with John Williams, he was at a economic, conference talking about rates and everything else, or just giving a scheduled speech, and the markets reacted. But now what you're going to see is no more speeches, no more comments. Powell doesn't tweet, but if he did tweet, they would not allow to be saying anything. It's going dark now, and whatever is going to happen happens. The only side of the coin that we're going to hear from now on is Trump and the media. So keep that in mind as we're pushing towards this. But again, I've talked about this on stream. I'll probably make a video of this of the weekend as I see how this week unfolds. And I kind of have my theory with this and how we're going to come in playing the Fed meeting. And I think it's going to be important. The next thing to watch is the cat dog. And this is the push and pull. If you guys aren't familiar, it is where you're going to see some stocks run up and some stocks run down. And it creates this kind of balancing factor where the market doesn't move too much. But what I mean in this sense is you're going to see tech earnings and the hype to the tech earnings. The tech stocks are going to run up, and we saw that today. The NASDAQ greatly outpaced everything else. You're going to see those go up and get their steam, but while the post earnings and then some of these companies that haven't reported, that don't have the same growth perspectives, they're not going to keep moving like that. So watch for that, and even in general, keep your eye out for individual names tomorrow. Be careful. Don't look at the SPY too much or see the overall market, it's not doing this or that. You got to be careful because you could get caught up missing a few opportunities when there's going going to be individual runners. And lastly, the next key for tomorrow, if you're looking for individual names to target, the IV is high, aka the prices are expensive as we're getting into this earnings season. What do you play? I made a few plays on this already, and I'm looking at them. It is the post-earnings hangovers and the post-earnings discount. So some stocks are, you know, again, UNH is a good example. I'll show you when we bring it up there. It has this earnings hangover. Even though they did good, they came down, and it's kind of going to do this thing for a few days before kind of leveling out and or at least finding its path and footing to which direction it wants to go. And then there's going to be the earnings discounts, where after some of these companies report, like Netflix, that thing keeps going down and down and down, but the puts and the calls all got cheaper from when after it reported. It just got cheaper and cheaper, even though the stock has been moving in one direction. So you're going to get discounts, and those are the companies that I want to aim for as well. So now let's get into the companies that are going to report tomorrow. Right off the bat, these are after hours. Well, even in the morning, you guys are going to get Lockheed Martin, and you know, they've been on an interesting move so far. You could watch as they relate to defense, and they could kind of hint towards Boeing, but I wouldn't give it too much weight. Next is going to be Biogen, and I love this one. I think this one is going to do something. You could just tell where it's hanging out here. You know, we're going to get to see, even though the drop was from something drug related and not earnings, we want to see if there's any updates that they give or anything of that nature. But Biogen could be a good one, but we have to be careful because this one may not have a continuation in the morning, but who knows? We're going to have to see depending on what the report is. You're going to get Harley Davidson, and they've been kind of showing something interesting, and they could give us some, you know, insight into both the domestic and the foreign markets. And then also pre-market JetBlue. This is going to affect transports, and it's going to affect some of the other plays I want to look at. But like I said yesterday, I like these ones, and they could be good. And then moving into after hours, and again, if I miss anything, if there is any important earnings, post them below in the comments. But Snapchat is reporting after hours tomorrow. I'm kind of a big fan of this. I think it could be good. They've already did good last quarter. They've really been on a streak in 2019 and just killing it. It's kind of crazy. It's like they didn't IPO too long ago, but if I'm looking at this, comparing it to when I bought my Facebook shares, this could be that make or break it quarter. If they start to shift in a direction, and if that earnings report is good, that could have a multi-day impact. That could mean a lot for the company. It could be good. So I probably will make a play on that tomorrow, and I might even get shares instead of an option. So think about that, and we might even buy the shares, sell puts, or I might sell puts, and if it drops, I'll buy some. If it goes calls, oh well. But I am holding really, really old Snapchat calls. We got these months ago, and they expire in October, so I've been up on them. Or actually, no, they came down. They were up for quite some time, so we'll see, but I like those a lot. And lastly, we get Visa. I'm not a big fan of these companies. They could report and do very good, but I'm never a fan of the financials and stuff for earnings, so watch out for that. And then Texas Instruments, they could be very, very good, again, and what they could mean for the other chip stocks and any of the technology stuff, it could have a pretty good effect. So those are your earnings. Now, what do we watch next throughout the day? I'm still going to save Beyond best for last, but Boeing, they're going to have their earnings, and this is the key I want to say. I think it could be good. However, the options are so expensive on the weeklies. You guys got to be careful. I showed this with implied volatility. This is where we started talking about this. Go look at the August contracts. They have about, I think, 50% lower volatility. It's the difference between like 60% and 40 or 40 and 20. But either way, you could literally, you're going to spend 10, 20% less or more on the same contract. That if you went, let's say you wanted to get a weekly put, you could go get it. If you want to get a weekly put, you could have got it for August for literally 10% more, 20% more, and you're going to get way more time, and that's what you want. Because even if you're right, if you see Boeing, you got to be careful. It could have a multi-legged approach, and it's random with how it moves. We've been watching that, and understand that move that it had the other day on Friday. That was a $17 move, and that's not too common for them, again, considering the scope. But, you know, if you've taken the boot camp, equal and opposite reactions, the news that was put out was almost tantamount to being an earnings release. In this sense, that was really the main thing people were worried about. Think about Lockheed Martin. They're reporting tomorrow. You know, again, I said be careful. They'll give a grain of salt into Boeing. And the point being, a lot of these companies, the big companies especially, you're going to have Coca-Cola in the mornings as well. I forgot to put that on there. These companies, people know they make money. They're not spending money for growth. They don't have any breakthrough technology. All they could do is really mess up, and they don't mess up. So that's what people care about. That's why Boeing had such a big effect. So the earnings shouldn't really surprise any investor. The only thing that could surprise them is what had to do with the 737 MAX, and guess what? That's already out of the way. But I still like them, so keep your eye out for that. Next on the list is Intel. After hours, Apple said that they're going to be buying, I think, the modem processing part of their company. So this could have an effect tomorrow. We did see other news like this before, but be careful now because someone dropped after hours on that, Qualcomm. So these are going to have two, counter plays with each other. So you're going to see Qualcomm will move down on it, Intel will move up, Apple could go up or down. We're going to have to see, but it's interesting they're announcing that before earnings than after. So again, think about with Boeing, just with what I said, how that news could affect Apple will be interesting, but Qualcomm and Intel are now in play for tomorrow. Next is Facebook. It had a pop and their earnings are there, and I think it reports this week as well. We grabbed the earnings play, and this is what I'm going to say with Beyond. Beyond Meat taught us something very important. So this is half of what I want to say, but it's related because we got a Facebook. I believe I grabbed a 235 next week call, and I could have got a 227 call for this week. There's a ton of activity, but Beyond reminded me to just get an extra week, because we've been seeing a weird volatility where it may not look like anything's crazy happening, but some of these names, if they're moving, they're really moving and kind of just keeping this melt up pattern. So what is far out of the money is still going to make you money, because as it comes into next week, it'll hold that extrinsic value and you're not just make or break it. And that's what happened with Beyond. You guys saw we were talking about it all week. I kept bringing it up there. Look, you could see my calls on Beyond expired, but right there, I grabbed one for 35 cents. And the point is, if I just went to extra week, so that's this week because we bought it last week, but that same $35 on that Friday could have got me this contract for, 27 bucks. It went to $4. I think all of these were even in that same price point. Again, 50 bucks, $40, but you see, you could have got better. And that's what we learned on Shopify. That's what I did with Shopify last week, and it paid off, but we forgot. So that's kind of the key I'm taking away from all of this, especially with the earnings season. There's going to be great weekly opportunities, but with the IV being so high on the short term, and I honestly think this is the market makers just taking advantage of any of the rookies and people out there. You could literally just get almost the exact same option, slightly worse, but it's still factoring in the odds of a big earnings mover surprise for really little. But again, you have to be careful though, just not to make sure you don't get caught up buying something super far out the money just because it's cheap and hoping the intrinsic value or the extrinsic value is going to carry the way, because that's not the case. Remember, we still want to get in the money. So watch Facebook. It had a few pops there randomly through the day, and it kind of did lead the way, and I liked it. Next, like we said, Qualcomm, keep your eyes out for that, and then Netflix. This thing has been dropping, and I grabbed the call on it as well too. I think I'm in 130 both sides on the weeklies, but this is one of those earnings discounts. We bought both ways the day after earnings. I paid 50 bucks both sides, and they were so expensive. Instantly, we lost 50%. They seemed like they were dead after the stock started dropping. Today, they were going for about $90 on the puts, so we made almost all the money back, and then the puts leveled out. But then I noticed the calls were really cheap, so then I grabbed a 330. Just like I said yesterday, it's either going to break below 300 and it could be vicious, or it's going to bounce back up to that 320, 330 range. So I grabbed that and I liked it. And then next, this earnings is August 8th, but watch how they play, watch how they're in conjunction with everything. I want to wait till they start having a pre-earnings ramp. I already have some calls. I may want to get some more, but I like Disney, and I do like it on the call side for earnings. We will have to see the pricing and what everything comes down to, but keep your eye out for that. And lastly, now is Beyond. So let me share with you what we did. So we had this play, and I've had it for a really long time. If you guys remember, I was down on this a while. I spent $2,300 for the option. This was sitting in here down $1,500 bucks, $1,700 bucks for a long time. But the key with this play, after I bought this contract months ago, and this is why I bought it, because Beyond has the ability to make these moves. Even if you're thinking about getting puts, I would try to employ a strategy like this where you could get near the money and then sell premium, week after week, but make sure you're always in a win-win. That's what I was doing. I bought this months ago. I held it. I was down on it, but why was I cool with holding it? Because I lowered my cost basis. The day after I bought it, I started, for those first 2 weeks, I started selling premium on it above the strike price. So this was in November. So then what would happen sometimes is that some of the weeklies, as it was getting ramped up, the weeklies would get really expensive, and I would just sell a contract that was a higher strike price than this, but a shorter duration. Some call that a calendar spread. I call it the ghetto spread. And I would make sure I'm in a win-win, just like I did here, because that is what I did today. But the story behind this, I've already collected $1,000 or more on premium on this stock. So even though it says I'm down 200 bucks or so, I'm actually up on it because I've already sold $1,000 I've realized from just using this contract kind of as if it's a stock and selling calls. Some would say a synthetic stock. But in this case, you could see exactly what I did here. It was ramping up, and when it was, I think it was around near these highs, I think it was around 198 when I did it. It was either one of these moves. I sold now the 225 for next week, which covers earnings, which again, and that was the contract with the most IV because of earnings. And I sold this contract for $650. It closed 610 on the ask, 550, but I'd have to buy it back if I wanted to close out. But my whole point is let this one ride till expiration, because no matter what, I'm going to win on this play now. Because let's say after earnings, it shoots up to 250. Well, I would miss out on some of the gains on the upside, but I wouldn't lose even though this is negative, because if I lose on this one, if this expires and I get exercised, that means this contract will be guaranteed worth $4,000. So 185, that's a 225, you take the difference. So that's what I'm doing here, because now if it drops, you know, let's say it rejects really hard off this 200, or coming in and next week it sells off, this contract could come down to a couple $100, and I could even close it out and then wait until either after earnings or when it does its thing and sell another one. But the point is, I'm in a win-win, and after collecting this $600, I've already got the other $1,000 or so in there. You know, it's now lowering the cost basis very, very greatly. But the best part is, I'm still gonna have this till November, and I could just keep rinsing and repeating until I either get my money back or I'm total profit. And then if it does shoot up, I'm just guaranteeing I'm gonna make money if and only if it goes up. So maybe I shouldn't use the word guarantee, but the concept is it's a win-win no matter what. And that's why I'm going super long on Beyond, because I'm going to just start trying to set up these plays, and I think it's a good opportunity. And people ask, why are people willing to pay this much? It's the same answer to why Chipotle is $700 a share, simply because it's food everybody uses. It's a great industry, but it's very, very competitive. And now there's something people like, and that is, one, if you could get market share and get ahead, but if you also have something called growth potential, and Chipotle and Beyond Meat have that. Not only do they have a market share, they could still keep growing. You know, Chipotle isn't on every corner like McDonald's is. You know, McDonald's is literally global. There's not much growing they could do, but these companies can. So again, Beyond it's a very unique opportunity. Is there a lot of hype? Yeah. Is it overvalued? Yeah, but people are paying for that growth, and what happens at earnings could be very, very telling, and could give us a lot. So there's a strategy with that. The next one to watch though is Shopify. We're still in this play, and this one is going to be a tightrope to walk. But again, this one's just getting hyped up into earnings. Again, earnings are next week, but people are buying it, and the key is to watch this one as a rotation between the SPYs. Does it go up with the SPY? Does it go down? It's kind of looking like a knockoff running with the SPY, but every day it's been having these moves. We have those weeklies. I did say I want to kind of roll those over, but the whole point is, if we could get that in the money, this one could do work. But after some time, there's going to be the law of diminishing returns, and you got to be careful and protect it, because it could lose its value fast. Next, we got Coca-Cola. Then there's Amazon. They're going to have their earnings. I'm going to look to, someone remind me tomorrow in the morning, remind me to look at these in playing, because if it does get crazy and people start to ramp up in earnings, there could be some good flips we can make on that. Because again, it's just been doing this random $20, $30, $40 pops, and if it could keep that trend, that could be good. Spotify made a move, and I like this one. I want to keep an eye out for all of these, and all of these are these kind of higher growth, crazy stocks that I like, because they can make some pretty crazy moves. And then UNH, we made a play. This is that earnings hangover, where it did good earnings, they guided up, but it's still kind of down because it already priced in a lot from the other news with the drug sales and the government rebates, and then now it's still responding to everything else. But once this hangover gets subsided, it's going to make a move. That's why I'm looking to scale in on those. And we got those 267s, and I said I won the 265s. They're still cheap, but that was the point why. If you guys seen, I've been either cutting the amounts I usually would want. If I wanted a $50 option, I'll go 25 bucks or less, and then I'm waiting to give it time. Remember, it's about when. And then lastly, I forgot, even on par with everything else in this whole, I would look to get these for next week too, because if it does start to break out and do its thing, it could reflect some of these crazy moves we've seen. Roku. So that is it, my friends. Keep your eyes out for that. Make sure you get your watch list. Thumbs up the video, and I'm going to see you on stream in the morning. Let's go!